Fourth quarter 2020 GDP takes Nigeria out of recession. Nigeria's external reserves dropped by $565 million. The Nigerian Export-Import Bank seeks expansion of export firms to boost non-oil sector. And Business Express today focuses on Nigeria's road to economic recovery as the country comes out of recession. The program is coming to you on the network service of the NTA. We're reaching you from Abuja, Nigeria's capital. I am Musa Abubakar. Latest figures from the Central Bank of Nigeria shows that Nigeria's external reserves dropped by $565 million, growth from $36.198 billion as of February 1st, 2021 to $35.633 billion as of February 15th, 2021. The reserves, which had gained in recent weeks, started a downward trend on January 26th, on which date it declined to $36.34 billion. The reserves, which commenced the year at $35.65 billion, rose to $36.52 billion as of January 25th, before dropping to $35.633 billion as of February 15, 2021. As Nigeria exits recession, the federal government, through the Nigerian Export and Import Bank, in collaboration with the Central Bank of Nigeria and the African Development Bank, is increasing its intervention funding to non-oil and services sectors to boost quality and quantity of exportable agric commodities in support of growth. Managing Director of the Nigerian Export and Import Bank, Abuja, disclosed this at a retreat for business correspondents yesterday in Abuja.
In the trade value chain that ultimately ends up in export, there are many SMEs that are involved that are not supported. They may not be exporters themselves, but they supply the OLAMs, they supply the big exporters in all parts of the country with products that ultimately get exported.
Now, the Federation Accounts Allocation Committee, FAC, at its meeting through virtual conference on Wednesday, shared to the three tiers of government a total sum of 640.310 billion naira as Federation allocation for the month of January 2021. A communique issued by the Federation Account Allocation Committee, FAC, at the end of the meeting says that from this amount, inclusive cost of collection to NCS, DPR and FIRS, the federal government received 226.998 billion naira. The states received 177.171 billion naira, while local government councils got 131.399 billion naira. Gross revenue available from the value-added tax for January 2021 was 157.351 billion naira, as against 171.358 billion naira distributed in the preceding month of December 2020, resulting in a decrease of 14.007 billion naira. The distributed statutory revenue of 482.958 billion naira received from the month was higher than 437.256 billion naira received for the previous month. Now, Nigeria came out of recession in the fourth quarter of 2020 by growing her gross domestic product by 0.11% compared with a decline of 3.6% in the third quarter. Benny Adams has details of the figures.
Latest figures from the National Bureau of Statistics and the International Monetary Fund data reveals that Nigeria's economy returned to growth after 2 consecutive quarters of contraction. Despite oil production falling to 1.56 million barrels a day in the fourth quarter from 1.67 million barrels in the previous 3 months, and crude contributing less than 10% to the country's GDP, Nigeria expectedly exits recession. Experts are of the view that, with the feat recorded, Nigeria's economy is showing signs of faster recovery than expected, as oil prices and output are also on the increase this year. The growing dominance of the non-oil sector is also tipped to contribute to the growth. The federal government's growth forecast for this year is 3% and doubles that of the IMF. In Abuja, Benny Adams.
Nigeria's economy slipped into recession in November 2020 after its gross domestic product contracted for the second consecutive quarter. Now, the figures from the National Bureau of Statistics, which show that the nation's economy recovered from recession in the last quarter of 2020, got many economic analysts saying that the economy is recovering but still needs tender care. They say although weak, the positive growth reflects the gradual return of economic activities. Our guest is Johnson Chukwu, Managing Director, Cowrie Assets Management, who joins us via Zoom from Lagos. Hello, Mr. Chukwu. How is Lagos today?
Musa, interesting, I'm actually in Abia State. I'm not in Lagos today.
Okay.
But I believe Lagos will be enjoying its clement weather. But where I am, there's Hamatan wind blowing in Abia State.
Okay. Many economy watchers had predicted the economy will come out of recession first quarter of the year. Did you see it coming?
And I'm sure a lot of Nigerian observers did not expect that we'll come out of recession in 2020, because most of us were projecting that the economy will come out of recession probably the second quarter of this year, that's 2021. But surprisingly and pleasantly surprisingly, Nigeria came out of recession at the end of this fourth quarter of 2020, which for me is a very cheering or emotionally uplifting news, economic news for every Nigerian, because it simply means we are no longer going down, we are actually coming out. We have actually come out of the trough of what we now need to grow at a faster rate.
What type of fiscal and monetary policies help to make the economy pick up?
Well, if we look at those fiscal policies and monetary policies, fiscal policies would have positively affected the construction industry, which grew in the fourth quarter. But if you look at those sectors that grew, you look at the sector that grew fastest was the telecommunications sector. The ICT sector that grew by 14.95% and currently account for about 15.06% of the GDP. Agriculture grew by 3.42%, account for 26.95%. Both of them alone account for more than 42% of the GDP. And the impact of their growth is what lifted the economy out of recession. The other sector that grew, like I mentioned, the construction industry, you also saw that we had a slower decline in sectors like the manufacturing sector. Sectors like trade remained in recession, but if you add the impact of telecommunications sector, trade, the ICT sector, the construction industry, the agricultural sector, and real estate services, those four sectors accounted for about 54% of the GDP in terms of contribution to the GDP, and they all recorded positive growth. So the sector that you could actually say had direct impact from fiscal incentives would be sectors like this construction industry. The telecommunication sector was benefiting from the change in the way we do things, or the change in our level of nature of interaction, because a lot of people have gone virtual instead of having physical interaction. So they are gaining from increased patronage of their services. Construction industry was coming from the fact that government is injecting liquidity into the economy and therefore engaging in more construction activities to take out those who are unemployed, as well as inject liquidity into the consumers, into the hands of the consumers.
Should attention be given to these sectors? More attention. Should more attention be given to these sectors?
Yeah, let me not forget the agriculture sector that grew by 3.4%. As we know, agriculture sector is the largest contributor to the GDP, the largest employer of labor. We know the monetary authorities have a lot of incentive for the agriculture sector. You have the commercial agriculture credit scheme, you have the anchor borrowers program, and the monetary authorities also reduce the interest rate on the intervention funds for all the sectors, including the agriculture sector, from 9% to 5%. These are also contributory factors to the growth we saw in those sectors. In terms of what other measures we need to do, do we need additional incentives? Yes, we need to work on two other critical sectors: the manufacturing sector, which contracted in the fourth quarter, but account for about 8.6% of the GDP, and the trade sector. The trade sector, two things are impacting negatively on the trade sector: availability of FX, as well as low consumer demand. Low consumer demand will be triggered as the economy is recovering. More people will be employed. Income will come into the hands of those who were previously unemployed, and they will resume their consumption. But most importantly, they need to have access to FX. So we need to further liberalize access to FX, and that will spur recovery in the trade sector. If you have growth in the trade sector and the manufacturing sector, the GDP growth rate will be materially above the 0.11% we saw in the fourth quarter.
Well, we have GDP growth at 0.11%, then inflation, on the other hand, at 16.47%. How do you marry the two?
The inflation rates that we're witnessing today are as a result of disruptions in the food or the agricultural belts or the farming belts as a result of heightened level of insecurity. So that may actually be the reason why agriculture sector grew by only 3.42%. Probably we should have seen a higher growth in agriculture sector. And because of the agriculture sector accounting for more than 1/4 of the GDP, if agriculture sector should grow at a rate of something like 4 or 5%, you will find that the GDP will grow at close to 2% because of its size in terms of contribution to the GDP. So we need to address which is impacting negatively on inflation. But if you look at the inflation figures, we saw an inflation figure of 16.47%, but food inflation was 20.57%. So if you take out food inflation, core inflation was only 11.885%. So which means that the high inflation rate of 16.47% was driven largely by food inflation, which could be attributed to disruption of farming activities in many of the farming belts of the country. So if we address that, you're going to see a faster growth in GDP because of the size or the share of the GDP that agriculture accounts for.
To the man on the street, how can he understand?
On the street, what they need to understand is that the worst is behind us, that we have sectors that are growing. I had mentioned the construction industry. That sector creates jobs for blue-collar employees. You should actually be looking for opportunities in the construction industry. The ICT sector, people should look at how do I migrate my services to run on the platform of virtual technology. That sector is growing. You look at the real estate services sector, it's also growing, and agriculture sector, which accounts for the highest level of employment in the country, is also growing. So you have to ask yourself, how do I fit into this sector that are growing? Where can I fit into the value chain of the agriculture sector because of the fact that it's a growing sector? For the man on the street, the opportunity in agriculture, the opportunity for job creation in telecommunication sector, the opportunity for job creation in construction industry and real estate services. Those sectors brought great opportunities. So these are where people should be looking at where they can get opportunities to realize themselves.
Nigeria cautiously out of recession. Does this mean the Monetary Policy Committee could start raising interest rates again to fight inflation?
So remember that I had mentioned earlier that the inflation rate is not driven by excess liquidity. So it's not what the monetary authorities can curtail by increasing monetary policy rates or cash reserve ratio or liquidity ratio. We need to address the core problem that is causing high inflation rates, particularly when it comes to food inflation, which is we need to address the issue of insecurity in the country. So I do not think they can afford to raise monetary policy rates or the rates. Secondly, a growth of 0.11% is still too timid for this type of economy we run, because our population is growing at about 3%. So we're still going to be seeing higher increase in level of poverty or worsening of the standard of living, because the population is still growing at above the GDP growth rate. Even if you look at the annual GDP growth rate, it was only 1.92%. It was negative on 1.92% for 2020. But even if you focus on the fourth quarter GDP of 0.11%, it's far below the population growth rate. So all efforts will still be geared towards stimulating the GDP to grow, economy to grow at a higher rate, at a rate higher than the population growth rate.
To sustaining this growth? What's the way to sustaining this growth?
One, insecurity in the country. Two, we need to look at those sectors that are growing and encourage them further. Probably the monetary authorities should allow the current 5% intervention fund to subsist in the immediate future, so that those sectors that are benefiting from it, the manufacturing sector, the construction industry, the agricultural sector, should actually enjoy more of that, so that we can see faster economic growth rate. We need to address the issue of availability of effects, and we need to trigger consumer demand. If we do those things, we should see higher GDP growth rate. At the minimum, we should strive to ensure that GDP growing above our population growth rate.
Well, thank you very much, Mr. Johnson Chukwu.
My pleasure.
Okay. Now moving on, global shares struggled to avoid a fourth straight day of losses on Friday, as data shows Eurozone business activity slowing this February. Benny Adams has a summary of global stock market activities.
Stocks in Asia Pacific were mixed on Friday, following overnight declines for the major indices on the Wall Street. In Japan, the Nikkei 225 declined 0.72%, to close at 30,017.92, while mainland Chinese markets were higher on the day. The Shanghai Composite rose 0.5% to 3,696.17. Hong Kong's Hang Seng Index was fractionally higher as of its final hour of trading. Africa indices were mixed during early morning trading on Friday. South Africa JSE Top 40, Kenya's Nairobi SE20, Tunisia's Tune Index, and Ghana GSE Composite started on a strong footing, except for Namibia Overall Index, which fell 8.88 points at 1,325.99. European stocks received a mixed handover from Asia Pacific, following Wall Street losses on Thursday, as rising U.S. Treasury yields and concerns about higher inflation caused a recent rally in the global markets to seemingly fizzle out. German DAX, London's FTSE, and CAC 40 of France started the day in a positive territory. Stock futures were little changed early Friday morning after Treasury Secretary Janet Yellen said a large COVID-19 relief is still needed for a full recovery in the USA. Futures on the Dow Jones Industrial Average dipped 31 points. S&P 500 futures traded near the flat line, while Nasdaq 100 futures were slightly higher.
While the Nigerian Stock Exchange closed negative, today's market negative. It declined by 0.06%. That's the all-share index. It closed at 40,186.70. 307.7 million shares valued at 2.9 billion exchange hands in 4,393 deals, while market capitalization stands at 21.025 trillion naira. Oil prices slid more than 1% on Friday, adding to overnight declines on worries that refineries will take time to resume operations after the big freeze in the U.S. South. Brent crude futures dropped 1.4% to $63.06 a barrel, while U.S. West Texas Intermediate crude futures fell 1.4% to $59.70 a barrel. Both benchmark contracts rallied to 13-month highs on Thursday, driven by the historic freeze in U.S. southern states, while analysts estimate the extreme cold has shut in as much as 1/3 of U.S. crude production. Attention has now turned to the impact on refiners. On that note, we now see prices on the commodity market as gold prices fell to a 7-month trend on Friday, extending 7-day long streak of declines. Now, in the currency market, dollar retreats this Friday as investors seem more enthusiastic about Bitcoin as a haven. Well, this is where we end this episode of the program. The last for the week. Don't forget you can access this and all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is NTA News Now. The hashtag is BizExp. Join us again next week. I am Musa Abubakar. Please stay safe.